So this is the third in the series of Reading to Black webinars that we've held, and we've got some future ones planned, particularly in the next couple of weeks, and I'll tell you a little bit about that at the end of the session. Just a bit about PCI. Most of you will know that we're an insolvency firm. We're there to help you and your clients through any difficulties that you might have, and we welcome the opportunity for your call to have any confidential chat that you might have to be able to assist both yourselves and your clients. This session is being recorded, and if you want to get a copy of the recording, then contact Chris Rollins of my office, and one will be provided to you. We welcome questions, and you can do that through the Q&A section of Zoom. So just raise your questions, and they'll be addressed at the end of the session that we've got today. So please feel free to ask any questions that you might have. Just a quick introduction. Frank Versace, he's had a whole career in business banking. Started at the ANZ Bank. He was National Sales Manager for ANZ Mobile Lending and also District Exec for ANZ. He's been a part of Macquarie Bank as well. But he's also one of the original members of Judo Bank, which is a very new bank, which I think is certainly making a lot of ground in relation to lending with a full banking license, and Frank will tell you a little bit more about that. Frank's been central to the establishment and delivery of Judo's unique SME-focused customer proposition, and has recently taken over responsibility for Judo's relationship banking nationally. So thank you, Frank, for accepting the invitation to join us today in our Reading to Black webinar series. I thought it was very topical that we raised this issue about how do we deal with financiers during what has been a very, very difficult time, I think, for a lot of businesses, particularly a lot of those in Victoria. So, look, can you tell us just a little bit about Judo and your approach to banking?
Sure. So, firstly, thanks for having us along. It's, as a relatively young company that's looking to make a real impact in the SME sector, it's always great to be able to get out and tell your story. So, really appreciate it. The topic for today, it's difficult to have any sort of conversation without bringing COVID into it, and COVID is, in an economic sense, sort of putting aside the health aspects for a second. It's a crisis that has uniquely impacted SMEs relative to the rest of the economy. So, in terms of what we're passionate about, it has been a tough year with lots to talk about. So in terms of who we are, and hopefully we're not as obscure to you as what we have been in the past with Judo Bank is a purpose-built SME challenger bank that was brought to market just over 2 years ago now as a private lender initially, and created by a group of executives that I think in a lot of ways were just as frustrated on the inside of the banks with what was happening from an industrialisation and commoditisation of lending process, and a real downgrading of the customer relationship piece, which had kind of taken place over the last 25 years, as what the customers have been on the outside of that. And so the idea to basically replicating what had taken place in the UK, where the challenger banking concept emerged in the aftermath of the GFC, to bring a independent, independently funded bank to market. And so, as I said, we started life as a private lender. We went through the process, which I wouldn't wish on anyone, in terms of getting your banking license from APRA. They really put you through the ringer, which we obtained in April 2019. So not that long ago. And in that time, we've lent over $2 billion to nearly $2.5 billion to the SME community, with a value proposition that centres around really understanding small business owners again, reintroducing the empowered relationship manager and the craft of banking. I know there's a lot of accountants and lawyers on the line today, and we've kind of, as an industry, and for industry practitioners who've taken their profession seriously, really looked on in envy as, you know, the professionalism of those industries has grown, while ours has been kind of watered down, and we've replaced, you know, technically proficient bankers in the front line with salespeople, and we've centralised decision, and we've offshored a lot of processes, and it's just been a rampant obsession with cost cutting, which has led to, you know, a really commoditised approach to what, you know, SME finance acquisition has meant. And so what we wanted to do was, you know, have really good people who go out and talk to businesses again, who are empowered to make decisions and apply common sense over policy. So in a nutshell, that's the story.
A good story too. I suppose one of the questions that a lot of us actually have at the moment, and is to try and get a little bit of vision around what's happening out in the marketplace. So what sort of appetite as a lender and a financier do you have at the moment? And are there any industries that are sort of, you know, maybe on the nose, or it's harder to get finance than others? You know, what's your view on that?
Also, well, I suppose sort of talking about it at a high level from a Judo perspective first. So we've doubled the size of our lending book during the COVID period, which is, you know, it's not been easy conditions to lend into, but you know, we think it was really important that at a time when the SME community really needed a bank to support them, that we were there, given that that's where we were positioning ourselves in the market. And so, you know, we consciously wanted to stay open for business and to continue to lend, despite all the logistical challenges associated with that, particularly with a high-touch relationship model that we were looking to bring to market. And so, yeah, we've continued to grow quite significantly. The system is down. You know, the appetite for lending over this period, particularly into this part of the economy, has been off significantly. And there are a couple of reasons for that. I think, you know, that industrialisation that we talked about before, in terms of the way risk is assessed these days, risk from a lending perspective, really is built around a simple model that looks at financials retrospectively. And when there's a disruption to that, you know, there's not many businesses that weren't going to have their 2020 and particularly if you're Victorian, 2021 financials reasonably severely impacted. Having a retrospective model is not going to be particularly helpful. And so the way a number of the major banks have dealt with that is to just switch the machine off and wait for this to pass, and then hopefully re-enter the market with as little amount of damage as possible. Our approach is significantly different to that, given that we take a commercial lens. The situation we're in is going to require a banker to take a look-through view to understand that good people and good businesses at the big, prior to COVID, are likely to be good businesses and good people on emergence from COVID, and really taking that look-through view. So our appetite is very strong. We're very interested in talking to businesses, with the overlay that we're facing into unprecedented times and an unprecedented outlook period. And so your question around, there's no specific industries that we exclude, but I think we do need to be realistic about what some of the more permanent shifts have been as a result of this, because with any economic disruption of this sort, there are winners and losers that sort of stay permanently once things return to normal. And so, having that sort of conversation with our clients, but also we're not at the end of it yet. And whilst anyone who heard our conversation at the beginning, hopefully the worst is behind us, but we wouldn't bank it at this point if you look at what's happening in Europe and in America and the rest of it. So, being realistic around how opaque the outlook period is, and is really important. But certainly still very keen to lend, still very keen to support the small business sector.
No, that's really good to hear. A lot of businesses, particularly, if you look at in Victoria as well, in particular, have been shut down for a long period of time in Victoria. We've gone through two, particularly the second one, a very severe lockdown. In terms of just generally getting support from your financier, What chances are there? What are the banks really doing at the moment for those businesses that are just trying to sort of reopen again after a prolonged period of a lockdown? And what sort of information should and communication should a business have with their financier during this period of time?
It's a really interesting question. I might answer it philosophically first, because I think the banking sector needs to recognise its role in what is a crisis of no one's making. And if you draw a connection with the GFC, which was primarily created by my sector and required a fairly large community and government effort to bail the banking sector out, primarily overseas, but even with some of the measures that the government implemented to underpin confidence in the banking system that might otherwise have not existed. And that would have had ramifications economically. But if you fast forward to this crisis, I think it's now incumbent on us to do some of the heavy lifting that is required to get the economy out of it. And I think we inherited that social licence as a consequence of the GFC. There's not many businesses that have their liabilities guaranteed by the government. We are in that privileged position, and with that privilege comes a responsibility to act appropriately when the economy needs you. And so, I think it's incumbent on all of the banks to recognise the uniquely important role that we've got to play in that. So I think, what the chances of getting finance needs to be viewed through that context in particular. And so, whilst all of the challenges with lending that we talked about in your earlier question, I think that banks should be taking that into account, and we certainly are, in terms of the responsibility that we see to the broader business community. How would you approach it? I think it's about being really open and transparent, and banks don't like uncertainty, and there's lots of uncertainty in this economy, and with lots of business owners, not through any fault or desire on their part, don't know what the future holds, and so the extent to which you can be transparent and open and realistic about what the prospects of the business are, I think there's heightened sensitivities to uncertainty at the moment, and the degree to which you can help a banker understand your predicament better or your opportunity better. There are lots of our clients that are seeing opportunities in this, and looking for capital to help them reposition their businesses to take advantages of opportunities that they see emerging from this. The more you can help the bank understand, the more timely provision and the more up-to-date provision of information, and the more realistic you can be about your assumptions that underpin your forecasts, I think will go a long way to supporting any lending application.
So leading on from that, someone puts a lending application in for their business. What is the current feel about lending criteria at the moment?
So, well, and again, I'll sort of distinguish between the approach that we've taken. So we try where possible, and we are in a regulated industry where the regulator takes quite an interest in us, and so we can't have no policies and no guidelines. But to the extent that we can make those as light as possible, require and allow for as much common sense and discretion on the part of the banker. And from our point of view, it's a very simple philosophy. It's, if we used to talk about it, it was around before my career, but certainly at the beginning of my career, we talked about the 4 C's of lending, and that was the character of the people behind the business first and foremost. So who are you dealing with? What's the quality of the management? Are they open and honest? Have they been through difficult periods and before? Can they demonstrate that? So all of the qualitative and quantitative things that make great business people is the first thing we look at, and that can cure a number of other ills in a business, and it can be a showstopper if we don't get comfortable with that. So that's the capacity would be the next thing we look at. So that's the cash flow of the business. How sustainable are the earnings? What's the story the business has got to tell around its forward earnings outlook? The capital contributions are how supportive of the business is the balance sheet. What's the asset that you're lending against, and that's not always the primary residence of the sponsor of the the directors of the business. And finally, it's collateral, and this has sort of become the first C for a lot of banks, where you can basically lend up to a certain amount of your property, but it's the last thing that we look at, and we take a much broader definition of what collateral actually means. Collateral in the first instance is whatever asset you're borrowing for. So that could be goodwill, that could be the stock or the debtors from a working capital perspective. It could be the equipment on the balance sheet. It could be another business that you're looking to acquire. And the art that's kind of been lost from a banking perspective is just understanding what appropriate leverage is of that particular asset, which requires a deep understanding of a broader group of assets than just property. So certainly from our perspective, that's the approach we're taking. That in a COVID world doesn't change. Right? So there's still the four things that we look at, and if the capacity of the business and the cash flow of the business is a little bit more uncertain, generally the character of the business owners becomes more relevant, and we can get past a lot of things if we know and trust and have respect for the people that we're dealing with in a business sense.
Yeah, because when you look at cash flows, there's probably quite a few businesses out there at the moment where cash flow might be fairly uncertain. It's we've come out of lockdown in Victoria. Everyone's out and about. People have got money because they haven't spent money for some time. How far ahead do you generally look in terms of cash flows? Is it 12 months ahead? I mean, how do you do it in this sort of environment?
Typically it's 12 months, but the uniqueness of this situation is, forecasting 12 months ago wouldn't have told you much of a story. And I think, just getting realistic around what the immediate term looks like, particularly in the Australian context, thinking about Victoria for a second, what that re-emergence looks like, what a reasonable trade-up might experience might feel like, and sort of what impost on working capital is, you need to replenish shelves or restock fridges or whatever that means, and just understanding the immediate term. During the height of the crisis, we were talking to customers about, two distinct pivots. One is for survival. What do we need to do to keep this business and their head above water? And one is for repositioning on exit. And that second one was incredibly difficult to project. And so you sort of make short-term decisions that keep the business afloat. And as the outlook period becomes a little bit clearer, you can start making more proactive decisions about the future. And we're still largely, hopefully the haze is starting to lift a little bit. But most of the customers we're talking to are still clear-eyed about what the risks look like, and the potential for a third lockdown and what that might mean for from a cash preservation point of view right now and that sort of thing. So making projections is really, really hard at the moment, but doing it in consultation, being realistic about it, and having a clear lens on what the risks are is probably the most fundamental aspect.
So with some of our say accountants that are listening today, they get a client that comes to them, says, look, I want to get some further working capital, I want to acquire another business that's on the market, or I want to get some finance of some sort. What sort of options are available to them, to the accountant, if an accountant hasn't had a huge amount of experience in trying to obtain finance for a client, or a client hasn't got that sort of experience? What sort of options are available to them as to how to make that application?
Yes, I think the most important thing is the relationship. And so it's going to be very hard in this sort of environment to be picking up the phone and calling a 1-3 number and speaking to someone at the other end who doesn't know you. You can't really tell your story to. And so, the notion of relationships has changed over the last 6 months, but fundamentally it's still the same. Whilst we might do it to a screen as opposed to over a coffee or a beer, having someone who's dedicated to your account, who takes the time to understand the business, and every business has been impacted slightly uniquely, and their circumstances are a little bit different, and the wealth of the people behind the business is a little bit different, and the market positioning is a little bit different. The opportunity to sort of sit down with a banker and communicate your unique story is probably where I'd start. So, getting in front of the right person at the right bank. And, there are different banks that are good at different things. So, depending on what the nature of the request is, just sort of understanding, who's who in the zoo and who's going to be the best place to support you would be a good start. And then I think in a broader context, I think accountants have got a huge role to play in, I talked about that heightened sensitivity to uncertainty that banks would have at the moment, and accountants play a huge role in, closing that gap. A lot of the time acting as translator between bank and customer, because sometimes you do speak different languages and you're looking at different things and you think about risks and opportunities in different ways. And, accountants are probably one of those unique professions that understand both sides of that ledger and can, translate Spanish to French if that's what's needed, and get timely information, present a realistic picture, the forecasting challenges that we talked about before. And then being an independent third party and, a profession whose integrity never really is questioned, is hugely beneficial for us in terms of placing reliance on information. So, it probably as important as anyone, and probably why accountants are consistently rated as the trusted advisor on every small business survey that asks that question.
Yeah, I think there's no doubt that the accountant is the trusted advisor and is there to assist clients in trying to get the best outcome for them. And certainly been very, very important during this period of time, from being counselling services really to poor business owners that are really, really struggling. In terms of, there's been a relaxation now in responsible lending that the government has announced. And what sort of impact do you think that's going to have on lending to SMEs in particular? Is it going to be a lesser criteria? What sort of impact do you really think that that relaxation is going to have?
So from an SME point of view specifically, because the responsible lending guidelines apply to consumer lending and home lending, but it does sort of that part of the that part of the lending system does sort of lubricate some of the other aspects of. So it was an interesting move when they announced it. I think from our perspective, probably the one caveat we would put over the top of it is, the removal of responsible lending laws doesn't give us a mandate to lend irresponsibly. But there was a lot of red tape, a lot of bureaucracy that came with that particular piece of legislation that was sometimes unhelpful in achieving the outcomes that customers were looking for. And, to reduce that compliance burden, I think is a welcome move, so long as, and that removes the ASIC regulation. You're still subject to the APRA regulation, which in the most part is quite reasonable, and it sets limitations around what banks can and can't do, and who they should and shouldn't lend to, and all that sort of thing. So there's still, it's not going to be a return to the Wild West, and there's still quite a bit of regulation, but it should actually free up a little bit of flexibility in the system to do the things that probably on the other side of things borrowers have seen as a lack of common sense and an over rigidity to policy and process. And so from that point of view, the devil will be in the detail, and we're still waiting to see, because it hasn't officially passed through Parliament yet. We're still waiting to see what the detail of any sort of replacement legislation looks like.
Yes.
But I think in concept, it's a welcome move, because it probably did go too far in a lot of respects.
Okay. Yeah, no, it's be very interesting to see. Any idea what the timing of that legislation's likely to be? Is it this year or?
I believe it was. I believe it was early next year, but I could be wrong on that.
Okay, could be interesting. Look, I think that's probably most of the questions that I've got, but it's open now to the floor. Any questions that you might have, send them through, and I'm happy to ask Frank. Just use the Q&A function that's there, and if they pop up, we'll ask. We're getting close to the end of the session, so go for your life. I haven't got any real questions at the moment, Frank. Any sort of parting comments? So we'll go back to this question of accountants and trying to get finance. You know, we talked about the 1-800 number. What about brokers? I mean, is that what's the you know, if an accountant's not comfortable or a business is not comfortable, you know, is a broker a good way of maybe you know, getting introduced to a bank?
Absolutely, and there's some really high quality brokers out there. We deal with pretty much every aggregator in the market, and tend to focus on the commercial brokers who have built their business models around commercial lending. And so generally, in a lot of cases, are sort of ex-bankers who deeply experienced, who understand the market, and you know, have an understanding, as I said before, as to who does what and who's good at and you know, when to negotiate something and when something's reasonable. And so, I think using a broker, I particularly for SME lending, particularly in this environment, I would sort of counsel to choose the right broker that understands the commercial landscape. But yeah, I think it's a great alternative.
Yeah. Thanks, Frank. A couple of questions just coming through. I won't announce who they are, who they're from, but one is that one's got an SME client who's a sole trader, has got a house that they rent, so no real asset base as such. You know, what sort of how should they approach a financier? What's the appetite for somebody like that?
Yeah, so again, I think talking about this is what the market's come to understand, that unless you've got bricks and mortar to provide to support a business lending request, that the answer has typically been no. And so really it's about what the purpose of the funding is, how strong the business is, and the quality of the business management, I suppose, that should be the first three things that you look at. The security for the transaction in the first instance should be the asset that is being borrowed for. And so if it's a sole trader that is in plumbing and needs some working capital, then it's the working capital assets that we should look at before we start trying to take mortgages on houses.
So again, you know, good quality business. You know, if it's a good quality business with good cash flow, it shouldn't really have too much of an issue, I thought.
Yeah, no, that's right.
Yeah. As another question, as a rural financial counsellor working in Gippsland, Victoria, how do you see the outlook for SME and primary producers in regional areas?
So I'm probably less qualified as a banker to talk about. I've never spent a meaningful amount of time sort of doing the farm gate type stuff, but I am a farmer's son, and having grown up in the Yarra Valley as a son of a migrant carrot farmer, I do know a little bit about from a personal experience point of view. And I think the outlook for that sector is bright, albeit that there was, in a meaningful way, primary production was underpinned by a lot of foreign capital that was coming into the country to support that sector. And with all of the sort of the geopolitical issues at the moment, particularly with China, that was putting a lot of money into despite, irrespective of what you might think of that in a more philosophical context, in a political context, there was a lot of capital coming from overseas into that part of the economy. But who knows what happens with it? We've seen a lot of the focusing on the export part of that market, a lot of sort of disruption. So it just depends how long that volatility goes for. I think domestic demand will remain reasonably strong. The international context is, I think, the thing to watch, and I don't know, how much of this is bluster and how much of it's all very serious.
I suppose time will tell, won't it? We'll just have to wait and see. Another question, what's the current cut-off date for the broader bank loan deferrals? Is it 31 March 2021? I think it might be.
Yeah, so, there's no specific time that banks have to adhere to, because it hasn't been mandated by any regulator that this is something that the industry has to do. Having said the way the banks are regulated is influencing it. So the loans that are on deferral, without getting too technical about the way banks have to allocate capital and that sort of thing, if typically if you're not making your repayments, you're considered in default, and when you're in default, you need to set aside additional capital from a regulatory point of view, which is quite costly, and that's why banks have an aversion to it. The regulatory framework has changed, which has allowed banks to be more accommodating during this period. And typically what it means is that you can't be on a deferral program for more than 10 months without, and still receive that sort of, and the bank still receive that more generous regulatory overlay. So I think what you'll find is, as you get closer to a 10-month period on any sort of deferral arrangement, the bank will probably become more proactive in trying to get you back to some sort of repayment. But the direct answer to the question is there's no end date. It's not like JobKeeper where there's a defined date and it stops at some point. It'll be an individual negotiation, typically between customer and bank.
And this is what we were talking about before, that early communication with your bank is probably the best way of dealing with any issues that might come up, and by having early communication, hopefully there's more options and solutions available. Would you agree with that?
Absolutely, yeah. I think early, open and transparent communication will be
Same advice we would give in dealing with any creditor that's out there, and the financiers are the same. Absolutely. I think that looks like all the questions that we've got, Frank, and we're pretty much spot on time. So, look, thank you very much. We appreciate you attending today and giving your insights into how to deal with financiers during this period of time. It's been very insightful, and hopefully it's been very helpful for those that have attended today to just give a bit of a flavour as to what to do when a client comes calling and needs some assistance. And of course, Frank is more than happy to talk to you about any of the opportunities that might arise with your clients. So please feel free to give Frank and Judo a call. Our next series is on the 26th of November, and it's about buying and selling accounting practices in the current environment. I think you might find that you might be very interested in what the appetite is for accounting practices. DMY, who buy and sell, involved in buying and selling practices, will be presenting during that particular session. And so we welcome you to attend that. Again, it'll be a short, sharp, half an hour, 3/4 of an hour session. I thank you all for giving your time today to attend. And thanks again, Frank.
Thanks. Thanks, Stephen. Thanks, everyone.
Cheers.